Tesla in focus today after big money institutional investors appear to be turning bearish, with some believing the stock will underperform over the next 6 months. That's the takeaway from an informal poll by Morgan Stanley. Important to note that analyst Adam Jonas does not agree with the sentiment, remaining overweight on shares, but he does see some roadblocks.
And who do you think is going to be the big winner in EVs? And is that going to then determine who's the big winner overall in sales this year?
Yes, I mean, overall, EVs are still a small part of the market, but at close to 10%, we think this year. We do believe, of course, Tesla will remain by far the market leader. Our forecast for market share this year is just under 50%. We think a new product, including the refresh of the Model 3, is going to be key for them this year. Of course, Cybertruck ramping as well. And then General Motors, as they ramp their Ultium platform, we think could be in about 11% market share. So sort of the first non-Tesla automaker with a double-digit market share this year as they ramp that platform. We think we need more product in the EV market. If you look at just some of the market coverage to date, it's pretty uneven in certain segments and certainly in certain price points. And one thing to keep in mind in the whole EV debate that's very important is in the U.S. we have on average about 2 vehicles per household. So the burden of EV adoption isn't about changing one's entire lifestyle to go all in on EV initially. It's really about converting households largely to one, combustion or ICE, and maybe a second one with EV. And if that starts to happen, you could see, in theory, a pretty rapid uptake of EV adoption over the next few years. But you need additional product. Of course, you do need better EV charging infrastructure, lower pricing, which IRA should help to some extent this year as well. So we think structurally the market is probably in better shape than what consensus currently bakes in.
And Itai, you mentioned pricing. Is that, in your opinion, is that the biggest challenge for adoption right now? I ask because if you were in the market, you're looking for an EV, let's say around $35,000, Itai, there aren't that many options. Do you see that changing though?
It certainly is part of it, and in survey work that we've done, it does come up as one of the top 3 reasons and pain points of EV adoption today. But EV charging infrastructure, range anxiety, even product availability also comes up in some of the survey work that we've seen. And what's interesting is some of the lowest priced EVs in the last couple of years have not been the most successful from a volume perspective. And one of the really impressive things that Tesla's accomplished amongst many in the last few years is, when you look at some of the third-party data around conquest, who are they actually taking share from? There's a fair amount, more than I think people might commonly believe, of that conquest coming from mass market brands, as you actually see, and that's where the appeal of EVs, right? With successful EVs have done some pretty incredible things in terms of market expansion and conquesting from segments that are even lower price. But broadly, to your point, yes, price has to come down over time to increase adoption. That we think 9.5% this year can still be done with some modest degree of a price premium relative to the overall market.
Itai, I guess I would ask my earlier question a little bit differently in terms of the number of vehicles versus the number of vehicles. If I am an investor and I am betting on the long-term viability and growth and eventually maybe dominance of EVs, is Tesla the way to go, or do I actually want to bet on one of the more traditional automakers who maybe have more room to expand there?
Yeah, everything is individual kind of risk reward. Right now with Tesla, we are on the sidelines with a 224 target. Looking for more convincing entry points there, just on valuation. I think you want to look for opportunities where EVs can be very additive and accretive to market share, and of course, longer term profitability by much more than what consensus bakes in. In GM's case, for example, right, and even Ford's, we have substantial losses, we believe, running through the P&L today. If you can protect key parts of the combustion business, for example, pickup trucks, which we think will see slower EV uptake, then the EV uptake more broadly could end up being actually accretive to the overall earnings over the next couple of years if these companies can execute. And those could be really interesting risk reward opportunities, because you can see some real healthy degree of potential upward earnings revisions as those things play out. So we look for a combination of defensive qualities in companies and, of course, offensive qualities with EV, where you can have a real path of earnings upside and accretion. Of course, Tesla is still by far the market leader. Again, we think about 50% market share this year, and will still be by far the leading share in 2025 by our estimates as well, about 40% share roughly. But right now we are neutral on it, just on valuation and kind of the latest risk-reward assessment.
Yeah, for sure. It's going to be an interesting year in the next couple of years to see how all of that shakes out.
Morgan Stanley just threw some shade on Tesla's future. Forget sunshine and rainbows, they're predicting a bumpy ride for Tesla over the next year. This is the time to watch out for any unusual movement in Tesla stock.
Welcome back to Yahoo Finance. Tesla in focus today after big money institutional investors appear to be turning bearish, with some believing the stock will underperform over the next 6 months. That's the takeaway from an informal poll by Morgan Stanley. Important to note that analyst Adam Jonas does not agree with the sentiment, remaining overweight on shares, but he does see some roadblocks ahead. Yahoo Finance's autos reporter Praz Romanian is here with more. And Praz, Adam Jonas, typically a big Tesla bull. What are the concerns here?
Well, they hold these institutional lunches, right, with their big shareholders. Every now and then, in this case, it's Tesla shareholders. And it turns out that the big headline here is, like you mentioned there, all of them at the luncheon said that Tesla will underperform in the next 6 months, and almost all of them said over the next 12 months. So they're kind of concerned that, these guys own a lot of shares, but they're concerned that the actual share itself will kind of stay where it's at through the next year. Why is that? So there's a few kind of concerns here. Number one, obviously, Musk sidelining AI growth, with his tweets about wanting to control the company, otherwise he wants to take AI out of Tesla. That's sort of a big driver for potential future earnings for the company down the line. Also, volume growth. There's concern that Tesla may not grow their volumes, and potentially even have negative growth with volumes. And in just this past quarter, they had about 35% growth year over year. So the concern is that we're going to have some issues with not just the AI stuff, but also the fact that the company may not grow as much too.
Sure. And this is all coming for us too, as we hear about they're upping some pricing on some Tesla vehicles, right?
Yeah, for the Model 3, the new upgraded Model 3, going to see a price hike here of $1,500, which is actually, kind of surprising, given the fact that we've seen so many price cuts in the past, notably starting in January. But this is a new model. There might be more demand for it.
Morgan Stanley's latest comments sent shockwaves through the investment world. So here's the gist. Tesla's growth might be stalling, but remember how they were zooming past everyone else? Yes, Morgan Stanley says that momentum might be sputtering, and that could be bad news for investors who are expecting Tesla to keep up with their rocketing trends. Also, competition's heating up, and it's not just Tesla on the racetrack anymore. Other car makers are catching up with their own shiny EVs, and Tesla's got to fight harder to stay ahead. Think of it like a high-stakes game of electric bumper cars. But what does this mean for Tesla and investors? That's what we're going to find out today, so buckle up and dive in. And also, if you're a Tesla investor, now might be a good time to buckle in and prepare for some turbulence or a surprise. Who knows?
Tesla shares moving lower this morning. Fourth quarter revenue and profits fell short of expectations, and the company says that vehicle volume growth will be, in their words, notably lower in 2024 compared to last year. Joining us right now is Colin Langan. He is Wells Fargo equity analyst. And does this come as a surprise to you because the street is selling the stock down today?
I mean, I think yesterday we got a bit of a trifecta of bad news. You have the comment on deliveries. I don't think that was as surprising. I mean, we kind of could see demand has been slowing a bit. I think the margin commentary was a bit of a surprise. They talked about sort of hitting a natural curve limit on bringing costs down. It's a big problem because they just cut pricing in China and Europe a couple weeks ago. So if you can't bring costs down, those pricing just hits your margin right away. So it feels like margins are going to come down next year, very likely. And then he also didn't back away from the comment about trying to get a 25% stake, which raises concerns about dilution if you're a shareholder here.
What do you think in terms of whether it's more important to have not get diluted, or to have Elon Musk there developing AI at Tesla? How would you come down on that?
I mean, the stock trades where it does because you're not paying for the core auto business, you're paying for the future ideas, and that is Elon Musk. But it would be pretty frustrating, I think, as a shareholder to, have to sort of dilute yourself to keep him around.
You've got a hold on the stock right now. 190 is where it's trading. In terms of the other big automakers, though, you like them less. Ford and GM, you have a sell on both of those stocks. Why?
I mean, I think the traditional auto, the industry is challenged right now. I think even what Tesla's talking about is right. Their demand is slowing, pricing's probably coming down. Those effects are going to affect the Detroit 3 as well. They just haven't seen it as much. So I think we have pricing headwinds. We have capacity has grown way too much, partly because of all the capacity Tesla has added. And we have EV regulation issues for the traditional guys. So they're going to have to figure out a way of trying to maintain margins as they sell more unprofitable EVs, which is just a structural challenge for them that I don't think they're going to be able to meet.
Morgan Stanley's latest comment is pretty interesting, and it gives a glimpse into the ever-evolving world of EVs. Price cuts and squeezing margins are the name of the game here. Tesla used to have this magic trick of offering lower prices while keeping profits high, but Morgan Stanley says that it might be getting tougher. In fact, they see Tesla needing to cut prices even more to stay competitive, meaning less green in their pockets. And that's not even all. Remember those sweet government handouts that helped people buy Teslas? Those ones are also driving up in places, making it less attractive to folks choosing to buy Tesla over the competition. Hey guys, welcome back to Tesla Tomorrow. Uncertain resale value is a pretty big wildcard. Nobody even knows exactly when and how much a Tesla is going to be worth over the next 5 or less years. And even this uncertainty can make some buyers hesitant, especially compared to established car brands with more predictable resale values. Morgan Stanley's take on Tesla has taken investors by surprise, but does that mean that Tesla's growth days are over? Let's find out, but before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Morgan Stanley's not all doom and gloom. In fact, the investment firm still believes in Tesla's long-term potential, especially when it comes to AI, and they see this as a hidden gem that could offset the challenges ahead. Tesla is one of the biggest players in AI, and Elon Musk is the biggest factor in its growth story. Musk is one of the founders of OpenAI, an American company that developed ChatGPT, and according to him, ChatGPT showed just how far AI can go. This technology is starting to make waves, and it could be the start of even bigger AI solutions. Following this data-based technique, Tesla is building its AI tech. Tesla is the only company in the world to develop a general driving solution based on AI, and the automaker's FSD system is starting to reach new heights, with Tesla cars expected to be self-driving within a few years. One of Tesla's main goals is to make its vehicles unique, and the automaker is using big data and AI to achieve that. For these cars to drive themselves, the self-driving cars need to continuously interpret images from sensors and machine vision cameras and then use that information to decide what to do next. They then use AI to recognize and predict the next movements of cars, pedestrians, and cyclists. Also, for its cars to be truly autonomous, Tesla's got to collect the right amount of data to train its algorithms and feed its AI. And the data collected from these cars will help car users plan their movements from time to time and decide what to do next. This means that more training data will inevitably lead to better performance, and that's where Tesla's got the edge.
So if people had been selling Tesla to buy NVIDIA, you think the best thing to do is to invert that, because you've probably made a lot of money on NVDA.
Well, let's be clear, Sully. I'm long NVIDIA and I'm loading up here on Tesla, but I think you're absolutely right. When you look at NVIDIA, it's 3 times the size of Tesla from a market cap perspective. It's now the 3rd largest. But the parabolic move in NVIDIA, if you look at a chart here, just since January, up 50%. And this is not up 50% from where it was cut in half in 2022. This is substantial. This was nearly $1 trillion company. Now to be up where it is, I think it can go from 750. It has to back and fill. So I think with earnings expectations, think about it, Sully. The earnings expectations for revenue for NVIDIA are over $20 billion. That's 3 times. That's 3x what it was just a year ago from Q4. So I think there's high expectations. I know they're printing money right now, but I think there's a pullback short term. You're seeing RSI levels overbought, but Tesla seems to be a different type of AI approach. And I know it's the Mag 7. It's not getting any love right now. It's about to trade 200 today, so we are seeing some buyer step in. But nonetheless, Sully, I think we have to understand there's huge opportunity in Tesla here, and I think you have to profit take in NVIDIA.
Yeah, and I want, you don't want all the, we call them Teslarians. I guess, what do we call the Nvidians? You don't want I think I just made that up. You don't want the Nvidians coming at you. You still love the company, but I get the mentality, which is, everybody's like, oh, drop Tesla. It's not Mag 7, it's Super 6 or Spectacular 6 or whatever name they want to employ to it. I get your take, and being a smart trader is trying to find the opportunity when other people are selling.
That's right, and I'm utilizing options to define my risk. I'm selling a risk reversal here in Tesla, selling the 185 March regular expiration, buying the 200 call. But I think you have to realize, just take a step back, Sully, not to get too wonky here, but from an AI perspective, I know we are really seeing Tesla viewed as more of a cyclical car company. I know it has a tech influence, but think of the spend. NVIDIA got a lot of press for buying SoundHound. They made a $4 million with an M. $1 million investment in that. Right now, this year in 2024, Tesla's going to spend $10 billion on their AI development. So I think from the longer play, I think you're going to see Tesla back and fill up to $300. You have to really put the emotion aside on Elon Musk. You never know what's going to happen or what tweet's going to come out. But I think from a true value, from a true trade perspective, this is a great pairs trade going into next Wednesday, where I think you will see a reprieve or a relent in the price of NVIDIA.
Jeff Kilberg, got a macro view on the markets right now? We just talked about two of the most important stocks that are out there, but do you have sort of a macro view? Are we ever going to see this broadening out that some people are talking about, that, you know, all the 3,000 other public companies that exist will finally get a little love?
I think that it is coming, and I know Ryan Dietrich talked about this morning on Twitter about this small cap explosion. If you see a breakout in small caps, that's the breadth you're looking for. But bigger picture, Sully, we can grapple about when, or even talk about if, how many points are going to be cut. But we are going to see a rate cut this year in 2024 of 100 basis points, and that's coming. I don't care if it comes in March, May, or June, but that's coming, and that's why you saw those animal spirits that Kate referred to. You're seeing people trying to utilize that $8 trillion in cash. They're trying to get it to work because they've been chasing, and the bears continue to be in the hurt locker. That's just a fact. So I think there's more room to run to the upside. I think we're going to test back and fill here to this 49.50 level in the S&P 500, but we're going to make new highs, I think, next month.
Tesla's access to vast amounts of user data is a key competitive advantage. Data from Tesla's customers base has served the EV company since its inception, and its work on self-driving cars is a part of its ongoing mission to put AI at the heart of everything it does. As Tesla celebrates its new projects, which include plans to transform the energy grid and home electronic panels, AI and big data will greatly help out the company. At a previous AI conference held by the automaker, Elon Musk said Tesla is a company doing deep AI work at the decision-making and training level, and this technology can be used for applications beyond just self-driving cars. But here's where it gets interesting. Many people think of Tesla as a car brand, but we think it's much more than that. In fact, Cathie Wood claims that Tesla's the biggest AI player, adding that AI will drive Tesla's stock price from less than $200 today to $2,000 by 2027, and driverless cars are going to drive that change. She also predicted that self-driving cars will generate nearly $10 billion in revenue worldwide by 2038. And this means only one thing, that there is still a lot more revenue to be made by Tesla. Adam Jonas has remained one of the street's most outspoken Tesla bulls, and he's constantly kept positive ratings on Tesla shares with juicy price targets. But this time, there's a bit of caution. But you know what's interesting? Despite sounding this note of warning about Tesla stock, Morgan Stanley is surprisingly still very bullish. In fact, the investment firm has previously revealed several interesting money-making strategies that Tesla could adopt in order for it to dominate the market, and you're going to be surprised at what they are.
I guess he has for a while as bigger than just cars.
Yeah, beyond an auto company is what he's sort of saying. There's a way to drive his bull case, I guess, for the shares of the company next year in 2024. Looking ahead to things that are non-auto, non-core is what he says to the business. And you know, it's funny because he mentions in the note later on that he has got significant pushback from clients about this, and he still, hey, you know what? No, I'm a true believer in this stuff. Like, for instance, Optimus robot, Tesla adjacent technology, tech that could upend the label market, Dojo supercomputer. We talked about this before. The supercomputer that can be used for any number of purposes like AWS, you know, in that sort of a realm of possibilities for the Amazon, sort of, you know, huge EBIT mover with AWS. Also noting their edge AI. Imagine your car is a robotic edge AI device. Beyond just collecting information for, you know, FSD, imagine the key for your car is a phone, for instance, a Tesla phone, right? Stuff like that. I also want to note the EV infrastructure kind of boost there. As GMs and the Fords of the world pulled back on spending, Tesla can step up on new spending for AI, for FSD, for their supercharger network, which they're using legacy OEMs for, that sort of thing.
And how much price is also the bullishness there? Because is his bet also in part he's looking at rivals who are kind of pushing out these EV-related investments and saying, okay, that's runway for Elon Musk?
Right, as the legacy guys pull back, gives you an opportunity to push in and spend more and gain more market share in those Tesla car adjacent stuff, right? Software, supercomputing, and the EV infrastructure stuff, like the charging networks we're talking about. That's sort of a big deal there. But I just want to note that it's funny because not funny, but it's his model for 2030 and beyond includes these services as being a huge factor in Tesla's profitability and revenue growth there. So it's something that we've seen other bulls like Dan Ives talk about that as well. It's just so far out that I think that's why clients are saying, hey, what about next year?
Well, next year he says auto margins are going to go down.
Yeah,
they're
right.
not. They're going to be lousy.
Potentially negative
Right.
operating margin, which is that's first I've heard of that. But he's still noting that and saying, hey, you know what? Look to the long term, not just 2024.
Morgan Stanley sees Tesla's auto dominance as peaking, meaning new initiatives around the areas like autonomous driving, energy storage products, and non-automotive licensing are going to be the next Tesla growth drivers. A previous note from Adam argues that Tesla's stock is going to recover from its steep sell-off, but in order to do that, the automaker's got to prove that it can expand into high-margin businesses beyond automobile manufacturing. He also noted that merely improving short-term execution or sentiment around the core auto business isn't going to be enough, and unless Tesla can shift towards more stable recurring software and services revenues, the firm expects continued pressure on the historically rich automotive valuations that Tesla once commended. So, what's next for Tesla? Well, there's more to this story.
Yeah, exactly. Howard Schultz eventually, when he did leave Starbucks, eventually went on to go into politics for a brief stint, and very brief. Also here, we got to finally talk about Elon Musk. From X to SpaceX, there's a lot on tap for 2024. I think investors just want to know what is going to take place in 2024 that Elon Musk just places so much of his time around, because that's going to have a broader overhang on what the stock actually does, what the margins look like. Is he ready, honestly, to continue to cut in order to get some of the Tesla models into driveways, into garages, into charging stations as well? Where does the network grow out in terms of the superchargers? Because that is the overhang for the amount of people who are looking to purchase or even finance. So where financing is even perhaps rosy, I dare say rosy, because financing a vehicle, financing anything right now, not the most rosy environment. But in the event somebody does still enter into a purchase of that vehicle, where do they then look across that network and feel confident? Because that's the hang up for a lot of people that were looking to buy an EV right now. Demand waning, a lot of the vehicle companies have had to pull back on some of their ambitions that they have as well.
If you're currently selling your Tesla shares, then you might be trading your future millions for a few $1,000s right now. What if we told you that every single Tesla share you own could be worth 15 times its current value in just a few years? Even if you choose to leave Tesla by then, you'll be leaving 15 times richer. Now, these aren't just predictions, but Morgan Stanley has also previously revealed how Tesla's stock could do this. They've unveiled a secret pathway for Tesla to further strengthen its iPhone moment and become the Apple of the auto industry. Morgan Stanley analyst Adam Jonas points to key areas, 3 of them in fact, that Tesla's got to focus on to completely take over the industry. First, avoiding other misses versus Wall Street consensus estimates after several downgrades over the past year. Second, the successful launch and delivery of new vehicles like the long-delayed Cybertruck, and more importantly, demonstrable progress in evolving Tesla's business model towards more software, licensing and services, as well as robotaxis. Tesla's a company well known for its exciting lineup of products and business models, which have proven to be very successful over the years. The company's established itself in several business sectors, reporting impressive numbers in revenue quarter after quarter. The diversity in Tesla's business model has been a major driver of growth, and if you look at it, Tesla's not only succeeded by being an EV manufacturer, but it's also made significant gains from energy, FSD, insurance, and other superchargers. All of these make up the company's valuation, and will collectively send Tesla stock to a whole new level. No doubt it's a bit rocky ahead for Tesla, but it'll be fascinating to see how it navigates the twists and turns. What do you think about Tesla stock? Let us know down below, and let us know your valuation of Tesla. And for more updates on Tesla, go ahead and click on this next video on your screen. See you there.